Here with more on Alphabet's fourth quarter, we have D.A. Davidson, head of technology research. That's Gil Luria. Gil, it is great to see you. So listen, this stock falling hard here, about 7% in the after hours. Give us your reaction, your response, Gil. It looks like what investors are clearly keying off here is that Q4 revenue miss, Gil.
Yeah, and the fact that it came from the cloud business, right? Google Cloud has been the star of the show and the consistent outperformer. It was gaining share up until recently. And so this is a pretty big deceleration from last quarter. Interestingly, it echoes the deceleration Microsoft Azure had. Microsoft Azure blamed the core hyperscaler business and said they got growth from AI. We'll find out what Google says, what their narrative is. Either way, that's a deceleration there as well. The search business actually did fine. And that's the one where if they ever miss in the search business, that's when people will really get worried. But the cloud is an important miss, and that's why the stock is down.
And so if we can extrapolate from Microsoft, as you said, we don't know what Alphabet is going to say, but do we see, and have we been seeing elsewhere, a sort of redeployment of resources towards AI, and does that have the potential to cost them in the cloud business, in the non-AI cloud business?
Well, that's what happened with Microsoft. Microsoft, in fact, was pretty clear about the fact that because they were so focused on the AI and the AI investments, and they took those resources from other businesses, they're paying the price for it now with decelerating revenue, significantly decelerating revenue in the rest of their Azure business. It's interesting to hear, we don't know yet if that's the case with Google, but if that is the case, again, there's maybe a reconsideration of the overinvestment these companies have made in the data center build out, in the AI build out. And to your point, especially in the light of new models now being 93, 97% more efficient, so 20 to 30 times more efficient, do you really need to build out your infrastructure this quickly?
So, Gil, on that point, when Alphabet tells us here they see 2025 CapEx about $75 billion, does that roughly line up, Gil, with what you were expecting to hear?
That's still very significant growth over what they'll have invested last year. So that is very aggressive growth. They haven't had a lot of time to react to Microsoft saying they're going to grow their CapEx less. They haven't had a lot of time to react to the very rapid advancements in the AI models over the last couple of weeks. So that may be an upper bound for CapEx in spite of the fact that it does represent significant growth.
So I guess the question is it too much? And if these companies start to come out and say, we don't need to spend this much, will that be good news or bad news for investors?
For investors in Microsoft, Google, Amazon, it is good news if they say they need to invest less in CapEx. If they can meet their demand without having to escalate the data center build out every year and still get the revenue from their customers, that'll be good news. Because right now, these CapEx numbers mean cash flow is declining. They mean they're going to have a drag on margins going forward. That's why Microsoft has underperformed so much, is that their margins are under pressure from these very high levels of CapEx. Their cash flow declined 29% last week. If we keep seeing the same things from Google and Amazon, they're going to have to be more disciplined about CapEx as well.
Gil, final question. You have a neutral on this name, Gil. Why are you on the sidelines with Alphabet, and what would you need to see to get more bullish?
Alphabet's management is sitting on incredibly valuable assets, but it's a conglomerate. So instead of having YouTube, Waymo, the TPU and DeepMind business being separate, some of the other bets being separate and getting their the appropriate valuation, they're bundled in with a search business that investors are just not going to pay up for. So the overall Google will continue to get search multiples even on those other exciting businesses unless they decide to spin them out, which currently doesn't look like they have a plan to do.
It does not look that way. Gil, great to catch up with you and get your instant reaction here. Really appreciate it.
Thank you.